U.S. officially labels China the currency manipulator. The U.S. has officially named China as a currency manipulator, a statement which will intensify tensions between the world's two largest economies. The announcement by the U.S. Treasury follows a sharp fall in the value of the Chinese yuan against the dollar. The drop caught markets off guard as Beijing usually supports the currency. Last week, China pledged to retaliate after U.S. President Donald Trump vowed to impose 10% tariffs on $300 billion pounds 246.7 billion of Chinese imports. On Monday, the yuan passed the 7 per dollar level for the first time since 2008, prompting Mr. Trump to accuse China on Twitter of manipulating its currency. The U.S. government said Treasury Secretary Steven Mnuchin will now engage with the International Monetary Fund (IMF) to eliminate the unfair competitive advantage created by China's latest actions. The move is largely symbolic because the U.S. is already engaged in trade discussions with China and has implemented tariffs on the country's imports. However, it fulfills a presidential campaign promise by Mr. Trump, who pledged to name China the currency manipulator on his first day in office. The decision rattled investors, with Wall Street's main stock market indexes recording their worst trading day for 2019. The sell-off continued in Asia on Tuesday. Analysis by Michelle Fleury, New York business correspondent. The move doesn't change much, not legally speaking, but it is a big deal, accentuating just how fast things have gone south between the world's two largest economies. When the U.S. Treasury labels a country the currency manipulator, as it has done here with China, the next step would normally be for negotiations to begin between the two countries. In this case, trade negotiations have already been going on for more than a year. The process also opens the path for America to introduce tariffs. Again, that's already happening as part of Mr. Trump's America First approach to trade. Under the designation, Mr. Mnuchin is also expected to work with the IMF to address its concerns. It's not clear yet what that will yield. Still, it's worth remembering that while the decision may not change much technically, it will have significant political ramifications. Nobody thinks this will increase the odds of a compromise by the Chinese side when it comes to trade. So don't be surprised if the prospect of a currency war further rattles investors' already frayed nerves. The U.S. defines currency manipulation as when countries manipulate the rate of exchange between their currency and the United States dollar for purposes of preventing effective balance of payments adjustment or gaining unfair competitive advantage in international trade. No country has officially been named the currency manipulator by the U.S. since Bill Clinton's administration did so to China in 1994. In its announcement, the U.S. Treasury said, China has a long history of facilitating an undervalued currency through protracted, large-scale intervention in the foreign exchange market. In recent days, China has taken concrete steps to devalue its currency, while maintaining substantial foreign exchange reserves despite active use of such tools in the past.